The big three Canadian telecoms have dominated the Canadian wireless markets and have had little to no competition. On top of that, Canadians pay some of the highest wireless rates in the world. They have been great dividend investments in the past decades with high yields and constant dividend growth. But with the rising interest rate environment and the slower growth, are they still a good investment as of today? First, as a disclaimer, I just want to say I'm not a financial advisor, so please do your own due diligence before investing. Let us do a quick comparison between the big three telecoms, Bell, Rogers, and TELUS. I also want to throw in Shaw and Quebecor. Shaw bought out Wind Mobile, which it rebranded it as Freedom Mobile in 2016, and Quebecor owns Videotron, which mainly serves Quebec at the moment. When looking at the market cap, we can see that Shaw and Quebecor are still small when compared to the big three, with Bell being the largest, followed by Rogers, then TELUS. In the past few years, the stock price of Bell, TELUS, and Shaw have really underperformed, and we can see that reflected on their PE ratios, but even at these levels, they don't look like a bargain to me, and I will get into my reasons why throughout this video. Bell, TELUS, and Shaw all have an attractive dividend yield at around 5%, which is great, but when you take a look at their payout ratio, Bell pretty much pays out all their profits in dividends, and I'll be worried about a dividend cut if they cannot further grow the company. Don't even have to mention about further dividend growth. TELUS pays around 80% of the profits in dividends, and that is much higher than I like, because that leaves them with very little cash left to invest back into the company to further grow the company. Shaw's at 70%, which is a little better, but still high for my likings. When looking at the price to book and the price to sales ratio, Rogers is a much higher premium when compared to the others and has performed well, but at these levels and with the rising interest rate environment, for dividend investors, it doesn't seem to be a very attractive investment. Also, the big three all have a decent amount of debt, but that's all because of the big investment required into building the infrastructure for the wireless networks. Now let's break down the company and take a look at their yearly revenue, and the first thing you'll probably notice is that the growth is not very impressive. We do see a very slow and steady increase in revenue, and that stability is good, especially for dividend investors. When looking at the stock chart, we can clearly see Rogers outperforming the rest by far, but another interesting one is Quebecor, which is based in Quebec. It has also performed fairly well, but recently we can see a slight decline in Bell, TELUS, and Shaw. The annualized return of Bell, TELUS, and Shaw has not been very good in the recent several years, and I do not expect Bell and TELUS to really be performing that well in the future as well, as their growth has really flattened off. Quebecor is still a small company and still growing nicely, which is reflected in their stock price. Same with Rogers, as 2017 was a good year for Rogers, and we will see if they continue that growth going forward. We can see this more clearly in the chart with Bell, TELUS, and Shaw declining, and I would expect this trend to continue if they are not able to grow the company, because with the rising interest rate, people are going to be pulling money out of their dividend stocks if they can earn a similar return in their savings account with very low risk versus a company that is not growing but with a higher risk. You have to weigh out some of the pros and cons, and I know I would choose one with the lower risk if the returns are similar. The EPS has been pretty flat for Bell, TELUS, and Shaw, but Rogers had a nice spike up, and from the looks of it, 2018 is going to be another decent year for Rogers. Quebecor has been growing their EPS at a good rate, but they are still a fairly small company. And when you take a look at their yearly profits, we can see a very similar chart to the yearly EPS, but take note on the profits as they are barely going up, but they have been increasing dividends generously. Just take a look at their dividend growth over the years. Bell and TELUS have reached a point where they cannot really grow their dividends anymore without further generating more profits, and they are pretty much paying all the profits away in dividends with no cash left to invest back in the company. Rogers and Shaw have stopped their dividend growth already in the recent few years, and they don't pay out all their profits out in dividends, so they can invest that back into the company, which I like much better. And Quebecor has only recently started to grow their dividends. When we take a look at their dividend growth, we can see that Bell and TELUS have grown their dividends very nicely over the past couple of decades, but in the future, I don't see this trend continuing with their current growth rates because they just cannot support it. Quebecor currently pays a very low dividend, so they are able to grow it massively in the recent few years, but even after the massive dividend growth, they are still currently yielding under 1%. But if they are able to grow the company, the yield in the future could be substantial if you lock it in at these prices, but that's a big if though. Again, we can see this more clearly on the chart. I don't expect Bell and TELUS to stop paying their dividends. I see them continue paying their dividends going forward, but I don't expect them to be increasing their dividends much more in the future without further growth. When looking at these telecoms, if someone asked me the question, which of these telecoms would I buy today? My answer would be, I don't want to buy Bell or Telus at these levels unless the company can show some kind of growth, because just locking in a 5% yield is not good enough for me. I want a company that's able to grow their dividends so that in the future I might have a 10% yield on cost, or a 15%, or a 20%, or even higher. Rogers and Quebecor is both interesting to me, but not at these levels. If we get a pullback, I will be interested. And Shaw does seem very interesting at these levels. Their payout ratio is a little higher than I like, but their yield is very attractive. And with the recent purchase of Wind Mobile, I would like to see if they can really gain some traction, and if they're able to, we can expect to see a higher dividend payout in the future. And as always, if you enjoyed the video, please like and share the video. It really helps out the channel. If you haven't subscribed yet, please make sure to smash the subscribe button. And thank you for watching, and I'll see you guys in the next video.